Michael Saylor is either the smartest man in modern finance or the most convincing salesman since subprime CDOs were called AAA. He took a declining enterprise software company and turned it into a multi-billion-dollar Bitcoin vault. That alone guarantees him a footnote in history. But history is full of footnotes that end with the phrase, "In retrospect, the risks were obvious." And that forces the only question that actually matters. Is this a revolutionary digital treasury model? Or a rerun of 2000, with crypto replacing .com? Same psychology, same assumption that this time is different. Today, we're editing the rise and potential fall of strategy. Michael Saylor is an American entrepreneur and billionaire. In 1989, after graduating at MIT, he co-founded MicroStrategy, a successful business intelligence software company that for a long time competed with Microsoft, SAP, and other ERP companies. But here's the part most people conveniently forget. Michael Saylor has already blown up once. In March 2000, MicroStrategy restated earnings due to accounting irregularities. The stock nearly collapsed, dropping by 62%. In a single day, Saylor lost over $6 billion on paper. Saylor was charged by the SEC with fraudulently reporting financial results. He later reached a settlement that solved the controversy. That's the kind of event that turns most CEOs into consultants and TED speakers. This is a man who has already flown too close to the sun and got burned. So let's ask the uncomfortable question. Is this Bitcoin strategy a redemption arc? Or a rerun with better marketing and a much more believing audience? Now let's dissect the so-called infinite money loop. The idea is simple. What if an asset could grow infinitely for the next 20 to 30 years? In 2020, MicroStrategy was stagnating against competition. The company was in front of a choice: slow death versus turnaround. Saylor convinced the board to invest all the company's cash into Bitcoin. The rest is history. In 2025, MicroStrategy decided to rebrand as simply Strategy and finally embraced its new shape as an investment vehicle to hold Bitcoin. Here's the loop. Strategy issues debt, mostly convertible notes, the financial equivalent of saying, "I promise this isn't equity," unless it is. They use that debt to buy Bitcoin. Bitcoin goes up. Strategy stock goes up more because leverage plus narrative is Wall Street's favorite drug. Then Strategy issues more debt or equity or whatever the market is dumb enough to absorb that week and buys more Bitcoin. It looks elegant, isn't it? Then we get to the part retail investors skip. At multiple points, Strategy traded at nearly 2 times the value of its Bitcoin holdings. This is where NAV becomes only an opinion. Net asset value means what you own minus what you owe. When investors pay $200 for a stock that represents $100 of Bitcoin, they are not buying Bitcoin. They are buying a story wrapped in leverage, with a CEO as narrator, until the market gets a reality bath, minus 60% in the last 6 months. However, Saylor keeps doing his thing. Strategy is launching new sophisticated financial instruments, perpetual Bitcoin-backed bonds, paying 10% or more to the subscribers. Sounds like sorcery. But what if the Bitcoin price goes down? At this point, Strategy stops resembling a corporation and starts resembling a belief architecture. Saylor doesn't speak in cash flows. He speaks in metaphysics. Cyber Manhattan, digital energy, apex property of the human race. This is not finance language. This is cult-grade mysticism. And to be clear, this works. Narratives always work, until the next reality check. Now zoom out to 2026. The environment has changed. Bitcoin ETFs exist. Custody is institutional. You no longer need strategy to access Bitcoin. And here's the part no bull wants to model. If large institutions, the kind that don't tweet, adopt similar treasury strategies, strategy loses its monopoly on conviction. When everyone can do the trade, no one gets paid for doing it loudly. So here's the verdict without romance. Strategy is not a software company. It's not even really a Bitcoin company. It's a leveraged duration bet on belief, packaged as equity. If Bitcoin goes up forever and credit remains permanently accommodating, this becomes legendary. If either assumption breaks, just one, there is no margin of safety. No Graham, no Demoderan, no second act. So here's the only question that matters. What happens if strategy is ever forced to sell Bitcoin to service its debt? Because history is very clear on this. The difference between a visionary and a liquidation is just one step away from your next interest payment. Let me know what you think in the comments. Follow for more.